One of the elephants in the room, as it were, is the ratings agencies, and Moody's in particular.
So I think the budget may, on balance, just be enough to avoid a Moody's credit rating downgrade to sub-investment grade in this quarter. Okay, so they'll give the review before the end of March, certainly. And the reason I say that is if you have a look at the substantial increase, projected increase in debt, borrowings as a percentage of GDP, that rose all the way up to 63% by the end of 2025-26. It's a horrifically high number, and it showed a sharp upwards trajectory. There was no leveling off of debt, there was no reduction in debt. And why that's so important is if you see continued substantial borrowings and you are borrowing to pay off your debt, you've fallen into a debt trap, which South Africa had done so. Our current balance was negative. That results ultimately in substantial fiscal problems down the line, and that's why we're getting our credit rating downgrades we've been getting so far. So the budget's basically rolled us back to somewhere in between the MTBPS of last year, which is disastrous, I've just outlined, and the budget, the 2017 budget, exactly a year ago, where we saw a lower borrowing trajectory. So possibly enough's been done, but I think when you assess the credit rating agencies' next move, especially Moody's, they look at a number of factors, which also include political certainty or uncertainty, and certainly the uncertainty seems to have reduced. Then they also, of course, include the economic outlook, and economic growth was expected to be quite poor in South Africa. Remember, we dropped down to 0% in 2016 from about 3% in 2013. Now the expectation is we could rise to 2 to 3%. And of course, the other big issue, the main issue really now for us, are the state-owned entities. What's going to happen with their governance?